Hi, Conroy, and thanks for joining us today. We will be focusing on the travel retail concession sector and its potential for margin gain. Based on your recent note, it's evident that much higher than normal air traffic growth could impact sales for companies like Avolta and SSP. How do you see this trend influencing their margin challenges?
Yeah, so I would say that the travel recovery has reached a stage where it's actually very strong. I mean, there's been a lot of doubt over the last 2 years, be it because of geopolitical conflict, cost of living crisis, higher interest rates. But what we keep seeing time and time again is the traffic being very strong. And if we look at Airports Council international data, that's looking for another 12% gain this year. And we think that, and the data backs this up, that travel will continue to grow ahead of the normal trend of about 4% for the next few years. And that's as we still are in recovery mode essentially from COVID. And what this does is this gives the concessions, the companies that operate retail stores in airports, a real good chance to bring their margin back because they can get some of the operating leverage from that, and that will ultimately what helps counter some of the higher rents and higher wage costs they're facing.
Okay, well, thanks. So you also highlighted a shift in growth emphasis for European listed travel concessions toward regions outside their core markets. Could you elaborate on the significance of the diversification strategy?
Yeah, sure. So the likes of Avolta, SSP, WH Smith in its travel retail business, uh, they're very much either European or North American focused, although SSP and WH Smith are still expanding more into North America. And that's working very well at the moment because, as we know, there's a global recovery going on. But if we look more longer term, actually, the growth is going to come from Asia, Middle East, maybe Latin America too. So it, while it's important that they gain the traffic growth, be it from strong transatlantic travel, um, actually those are more mature regions in terms of travel, and we should really be looking at the likes of, say, India, which IATA sees having being a country that has about 6% annualized growth for the next 20 years. That's really where I think that the shift in focus will be if they want to keep this growth story going beyond the COVID-19 travel recovery.
Well, thanks, Conroy. And last but not least, I know you've been involved in a lot of events lately. Could you please expand? What are the most common questions you received from clients, and where does clients' interest lies right now?
Yeah, so one of the questions I've been asked a lot about recently is actually European capacity. So Europe is maybe not recovering at the speed that it should be because there are certain capacity constraints, whether that be staff shortages at airports, whether that be a shortage of planes. We've heard about the Boeing delivery delays, for example, and Airbus too. But another issue is the geared turbofan engines, which essentially have a powdered metal contaminant, and that's causing planes to be grounded. And this could last for up to 3 years. It first came to light, this issue, back in summer 2023. But the real peak of this issue is right now. So there's lots of planes grounded right now due to engine inspections. Another thing we get asked a lot is about corporate travel. Corporate travel is behind leisure travel, as we see probably when we go to the airports. And that's probably going to continue to be the case because of things like Zoom. But corporate travel coming back a little bit more this year.
Thanks for your insights. For more research from Bloomberg Intelligence, you can find us on BI Go on the terminal.